Ladies and gentlemen, hello from Europe. My name is Michael. I do something in venture capital investing and in technology entrepreneurship, and we have Valentin on the line. So Valentin is a big guy in South East Asia. He's into IT industry. And Valentin, hello.
Nice to meet you guys. I hope we have a nice podcast today. Well, it's not a podcast, it's a video cast, but I guess we'll discuss very interesting topics. So, Michael, go on.
So, as I said, so both of us are into IT business and especially startups and technology entrepreneurship. Technology entrepreneurship, not at the corporate level, but at the level of small and medium companies. And we are trying to figure out and we help startups to reach the skies. So today's topic, why startups fail. So everybody is more or less fed up with success stories in all the media. So let's have a look at the different part of the coin. So Valentin, do we go?
All right. So first of all, I think we should try to understand what's going on in the market right now. Is it falling apart? Is it damaged due to well, some expectations of a recession or something, due to layoffs in the IT sector for the biggest IT companies in US at least? And we have these with these tendencies that the market is not the same as it was, for example, in 2022. It is changing, and the landscape of venture capital has changed a lot. We have dropped down in venture capital at least tens of percent. We have some stats here, but maybe Michael, you have some stats on that. So can you comment? What is your opinion? Is the market does the market show any trends, any signs of giving up, of falling apart? Well, is it changed? Well, how does it change from previous years in terms of how do the startups survive at the moment?
To the best of my satisfaction, the market is falling apart, which is wonderful. So for a couple of years, I was totally fed up with the craziness on the market in terms of valuations, in terms of the unviable business models, which were financed by this crazy helicopter money. And I was personally very unhappy about this because the very tissue of the world, of the finance world, was ill, so was broken because like something which was not supposed to survive was financed. That was very bad. So now is a big judgment day. So big judgment day. I'm very happy that a lot of startups failed, which were artificially fueled by cash. And also, look, you asked the question like, what's going on? Trend downwards. So it's not accelerating. But it's not stopping it as well. So as we say, like second derivative is zero. So first derivative is a negative number, so it's down. Second derivative is zero. It's not accelerating more, but it's not stopping as well, which is good. So, but I would like to extend your question. Good news that very soon, maybe not so publicly, but not startups, but venture capital funds will start failing. That will happen. That will happen for sure. You need to understand that even in the western part of the world, venture capital business is quite fragile. So you are not very far from the break even if we are taking the whole general population of venture capital funds. So like average return is 8% per annum, and distribution of this 8% is highly deviated. So like one quarter of the venture funds get it all, and 3/4 of the venture funds they're losers or they are around break even. So again, what we should expect? We should expect news about failure of venture capital funds, and after venture capital funds, there will be the third wave. The third wave, it will be LP, limited partners, who are investors of investors, who are investors of venture capital companies. So it will be pension funds, it will be insurance companies, so more or less some corporate money. So we should expect that financial hangover will be quite painful. But let's enjoy that like the navigation system in the financial world is restored. So
do you feel that the situation is going to improve in some time that we might foresee right now, or does it show no signs of improvement in some close future? Not yet.
Not yet. Not yet. So we are still moving south. So I'm saying south. I don't
All right.
mean I don't mean Antarctica. So we are still moving south, and we are globally. So I'm located here in Europe. Europe goes through this downward cycle a little bit less painful than United States, because Europe was not so much involved in this craziness. So German conservatism stopped like a couple of years ago, stopped venture capital money, sogenannten Wagniskapital, so-called risk capital from crazy decisions. So now it's not so painful as in the Western Hemisphere. But back to your question, it will be much better. So the world will be better, much better, because key question is not it's upwards or downwards. So venture capital money, venture capital cash, it's flowing in the great volume, or it's a shrinkage. It's question number two. Question number one is motivation, signals, how healthy is the system, how healthy is the industry of technology entrepreneurship, how money allocated according to the signals. So 2 years ago, 3 years ago, system was very ill, in extreme ill condition, because signals meant hype. It was the best startup leader would be some media guy or something, or girl. So I would predict that.
Yeah, actually, everyone needs media. It's like just the marketing part. So you have to have attention of the public. So that is why you just make all this hype around what is going on. And in some cases, it's not healthy. It is unhealthy situation. But again, to my understanding, we are in a flat market right now. Probably I would not say that the trend is downwards. Well, yeah, we had some fall. But again, we don't see right now any expectations of just a rise, like a rapid rise or something, because obviously we had layoffs in the beginning of the year. We had all the signs of a depression, and now we are seeing some signs that the Standard & Poor's index is pretty stable at the moment. I guess it's a little bit. It has risen a little bit from the lowest position in this year. But again, the driving force of moving up, I don't see it right now. I don't see the new projects upcoming. So the AI, probably there's something new, well, in that, but it's not much. There is several big engines are running, and big companies are into that. But a lot of hype around. Well, it is really a hype at the moment. Okay, I suggest that we just get back to our initial topic, which is why the startups fail, and what's going on around that, and what would be the trends for probably some near future around the failures of startups. And we have some studies about that, and there
Yes,
is
we do.
some analysts show us some listings of what would be the top reasons of the failures of startups. And well, I'll read some of this information, and probably maybe you can comment on that, and I will comment on that as well. So we see that the first reason is that the startups run out of cash. So probably it is true. But again, and my position is that running out of cash, it is just the bad planning, just bad financial planning, bad resource planning, and that is not the reason that
I'm sorry.
suddenly.
I want to say something urgently. So I totally disagree that there is such a reason for startup failure as run out of cash. Because to say that startup failed because it ran out of cash, it's like to say that the patient died because his temperature got equal to the room temperature. It's symptom. It's not the reason. So run out.
Absolutely agree. I totally agree with that. So so the startup has cash invested into well, this venture by some investors, whether it's 3Fs, whether it's angels, whether it's institutional venture investors or someone, and that is just planning. That is just resource allocation and the right strategy of moving around. So if there are some failures in the management, so basically the managers are guilty in that. So these mistakes should not appear, should not come into place, and there's simply something that has not to take place in real life. So again, I totally agree that it's not the reason, it's a symptom, and poor management, that is the reason probably of what is going on. Another thing that would be the first, that would be the second reason for startup failure is no market need. And that is something around management as well. So basically, who defines so whether the market need exists or not? Basically, it is the strategy. It is the product definition. And how do you manage the product definition and the understanding of what the market really wants? Is these some kind of management capabilities of this team? Some of the projects, some of the products pivot a lot, and the others do not pivot. So, for example, we have this startup that was delivering pizzas in their trucks, and the pizzas were made inside of these trucks so that they can maybe do not waste a lot of time in their kitchens and just save this time while driving from one place to another, from one customer to another. I guess that is something of a stretch. So probably that does not work in real life, and we've seen that from recent 6 years of this startup, and so it failed. It eventually failed. So do you have any comments on the market need reason for startup failure?
Yes, I do. Actually, I approach this point from a little bit different angle. It's a question of testing. So what it means, no market need. So how it works? Like first you generate hypotheses, like many hypotheses. So like hypothesis for what? For in this relation for product market match, for product market match, product market fit. Sorry. So after this, you need to test your hypothesis. So you need on one hand to spend as little resources as possible for the test, and on the other hand, you need to get as reliable information, as reliable data as possible. So, like for me, no market need. It's a severe failure in the mentality of management. So, I've seen many times, like
in the framework of management, they apply in real life for their project.
Yes, yes, I would say in business mentality. Yes, in the framework. So, like these people need to understand that their mission is not to decide on the idea and then to do whatever is necessary to make this idea succeed. No, it's not your mission. So your mission is not to make your idea succeed. Your mission is to find the idea which will succeed anyway, with you or without you. So being startup means not being successful in pushing your idea and making your business model dominating. So it's about finding, it's about informational research, but informational research not in the office with databases, but informational research in the field when you spend money on the real working things and test the response. So I would say it's a question of mentality, or as you say, framework. So like our task is to understand how not to let these things happen. So sometimes it's mentally very difficult with startuppers and especially startuppers who like feel themselves as the leaders, especially from cultures of zero tolerance to failures. So, for example, if the hypothesis did not get confirmed, so they consider this as a failure, which is not. So, as Edison said, I did not have 10,000 failures. So I had 10,000. 10,000. I forgot exact citation, but it's not failures. Okay, let's move to the next one. My turn. Got out competed. Let's keep it because it's quite straightforward. So it's not very
no.
No?
I would like to comment on that. So got out of competed. So basically, this means that there is a competition in the market, and that is totally okay because if there is a market, then there is a competition, and if there is no market, then there is no competition. So you should be ready to compete as soon as you start business, and only dead market has no competition. So that's basically the main idea of how the market works. And the thing is that on the newly appeared markets, on the highly potential and growth markets, there's very little competition. And as soon as the market matures and gets all this traction, all these customers, and gets all the attention of the crowd, probably at this point competition rises, because every startup has a lot of competitors, big and small, highly potential and with low potential, with good team, with bad team, with big investment and low investment, and around that. So as soon as you get the understanding that there is something in the market, so you totally at this point get competition. So and again, that is something that we can refer to mismanagement. So this is basically the framework of how the business leadership of the team approaches this problem. If they are not able to compete, so that's something wrong. So maybe they are not pivoting in the right pace. Maybe they do not have the right team. Maybe they do not have the right skills, the right frameworks, how to manage it. And again, so that it's something that we can work with the right framework, with the right team, with the right investment, and all this that comprises the business.
I changed my mind. I changed my mind about skipping this issue. Got out competed. It's the same thing as the first reason run out of cash. I mean, in terms of it's not a valid reason. It's not actual reason. My consideration, my logic. So what it means, to get a failure. So point is, like, every market has a place for several players. So usually, like, there are two big leaders, like one super leader, one chaser. So let's say so there is a Coca-Cola and Pepsi-Cola. Like there are some niche players. So and for example, like you compete on the new niche which is growing. So if we are talking about technology entrepreneurship, so it means that like some segment is most likely really does not exist yet. So it's in the process of creation, in the process of emerging, self-emerging. So my point is that doesn't matter like how much money you have, how much resources you have. At the end of the day, you either succeed to get something valuable or not. If you succeed to get something valuable, but you understand that you are short of resources to get number one or number two place in this rally, no problem. You will be purchased. There will be exit. There will be exit for your investors. There will be exit for your staff. There will be exit for you, for founders. So if you succeeded somewhere, like to a certain extent, you will be acquired, like by those guys who remain in the market. And it's a big question: who's a winner, who's a loser? Because like most of them will continue burn cash, and you will get easy money to reinvest in something else. So like total closure with about zero scrap value, it's a very bad sign that something was very wrong about the model. So usually it happens when the majority of money spent on marketing, on advertising. So if you invest money in technology, if you invest money in logistic channels in a wide sense, not just in railroad, but IT logistics. Like if you develop infrastructure, so you have something, you have some value, and this value most likely will not disappear in the air if you close the business. Most likely somebody will buy you. So that's what I wanted to say. So
okay, let's move on.
And like last reason for today. So we will not do a lot of timing today. So like about 30 minutes, half an hour. Okay, last one. A flawed business model. Flawed business model. Okay, in this like one factor is failing here. Like flawed business model, you need to approach this in terms of timing. Like business model can be flawed at one scale, and at certain time of maturity of your company, maturity of the market, and the same business model will not be flawed, so will not be failure under a little bit different conditions. So
yeah, I would say that there are a lot of dimensions to this statement. You can be flawed in various ways and in various situations, and various issues might arise. So probably that's very generic to say that the business model flows. And again, the strategic management team has to manage, has to define what is right, what is wrong. If something is wrong, there should be probably a pivot and some other methods or technologies or team or approaches or other options should be selected and chosen to overcome all these difficulties. And it is totally possible due to the right management. Again, something can happen that you might lack resources or invest heavily in some approach or another. But again, that is something that you have dealt with.
At the end of the day, either you have more revenue than expenses, or you have approach to venture capital money to stay afloat before the exit. So one of two conditions. So I personally is not a big fan of gambling to sell the company with negative cash flow just for some other stuff, like just pure for technology or pure for marketing channels. So I prefer to get independence as early as possible. So reasonably, of course. Like there is time when you are totally sponsored by venture capital money, when you are not self-sustainable, and it's okay. But I have such a, let's say, prejudice. So I want the company to get break even as soon as possible. Not necessarily to earn dividends, not necessarily to earn excessive revenue, but reaching break even, it's a huge deal. So especially it's sweet when you reach such kind of break even, when you are break even in terms of scaling. Like when you reach break even, you inject some cash. So your expenses are up and your revenue are up as well. And like in this, let's say, differential equation, so like the difference between extra revenue and extra expense in the worst zero, and in the best it's a positive number. So, but usually, again, like to my understanding, that is a byproduct or it's a derivative of first market need, if there is a market need, and second, yeah, execution. Yes, there can be market need, but this market need may not be supported by enough demand. But that then it's not a market need. Okay, I would conclude it this way for today. Like product market fit, that's absolute dominant point in the whole story of startup business model as well. So I have a question. Why do you think so many startups, I mean, very well financed startups in tens of millions of dollars in USA and in your Asia, by the way, in your Southeast Asia, you're a big guy in Singapore and in Southeast Asia. So why many startups get financed with huge money for projects with obvious, extremely obvious lack of product market fit? What do you think?
Wow, that's probably a stretch that they think that there is a product market fit. But again, you can rely, well, you can have this hypothesis, you can verify this hypothesis, and you can rely this to some kind of market research prior to financing and to investing all this money into your project. Because obviously, without support of the market, it's eventually not going to fly. And you have to be supported by the market, by the need of the market. And again, product market fit is where everything starts. I suggest that is very important.
Let's finish with a joke. You said research. So I personally was present at one of the exit, like it was in Wien, like capital of Austria. There was exit, and it was not my company. So, but anyway, so like there was event, and there was exit, and there was a kind of a party over there, and startup guy, like founder, was over there with with the first investor, like, and he was making a speech on the stage, and founder said to the first investor, "Thank you so much in believing. So thank you so much for giving first money that you believed in us, blah blah blah." And then investor guy sat very close to me. Nobody could hear him. I could hear him, and with his lips, he said very very slowly and very calmly, "That's because my associate did a bad job on the research." So stay
Yeah,
cool.
that's the truth. That's the truth of how it happens. That
Да.
was a mistake, and it happened. So mistakes sometimes are profitable.
Yeah. Okay, ladies and gentlemen, we will continue with the list tomorrow. So I find it quite exciting. And again, like an antidote to the success stories of successful success, let's deep into the failure stories. That's much more interesting, I guess. So thank you, Valentin. Have a good night.
Thank you very much. Okay, have a nice day, everyone. Yeah.
Cool.